Hold on to your hats. Don't fuck this up. Don't lose.
Ceasefire, Iran is charging transit fees through the Strait of Hormuz equivalent to $1 per barrel of oil, but it must be paid in Bitcoin. On average, a $10 trillion bank just became the first U.S. bank in history to launch a Bitcoin ETF.
Three massive stories just dropped at the same time. Iran is forcing ships to pay Bitcoin to cross the Strait of Hormuz. Morgan Stanley just launched the cheapest Bitcoin ETF on the market. And Raoul Pal says if you sell now, you're going to regret it. Let's break it down.
Something crazy just happened. After finally agreeing to a 2-week ceasefire, Iran is charging transit fees through the Strait of Hormuz equivalent to $1 per barrel of oil, but it must be paid in Bitcoin. On average, 20 million barrels pass daily. Iran will make over $7 billion more every year than they made before the war with the US started. It also means global nation-state cryptocurrency adoption is going to skyrocket because every vessel that wants to transport through the Strait of Hormuz is going to be using blockchain. In fact, specifically, they will be using Bitcoin. Here's some more math on this. Iran is charging $2 million per ship to cross the Strait of Hormuz, and they want it in Bitcoin. At $72K per Bitcoin, each ship equals about 27.7 Bitcoin. Pre-crisis, 130 ships crossed daily. That's 3,000 Bitcoin daily, 100,000 Bitcoin monthly, 1.3 million Bitcoin yearly. The entire Bitcoin network only mines 450 per day. Iran would accumulate 8x the monthly supply every month. A sanctioned nation building a Bitcoin treasury through a toll booth.
Let that sink in. A sanctioned nation is building a Bitcoin treasury through a toll booth. 3,000 Bitcoin per day. That's almost 7 times what miners produce. And every single country that ships oil through that strait now has to hold Bitcoin. This is a nation-state adoption by force, and nobody saw it coming.
What would we see if Bitcoin and crypto really were the future? Well, maybe we'd see something like this. Today, Morgan Stanley's spot Bitcoin ETF is live and officially trading on the New York Stock Exchange. A $10 trillion bank just became the first U.S. bank in history to launch a Bitcoin ETF. According to the senior ETF analyst at Bloomberg, Eric Balchunas, day one volume is estimated around 30 million, and year one assets under management is estimated at 5 billion. 5 billion buying spot Bitcoin. Morgan Stanley has 16,000 financial advisors ready to promote it.
There's only a couple that have like the Morgan Stanley brand name behind it, and these 3 ETFs are going to have it. They have $6 to $7 trillion in assets, depending on what you're talking about, in their advisor side of the business. I mean, again, taking just a little bit of that, moving it over is a big deal. And also, I think this is their way of, potentially trying to get some crypto millionaires, a lot of people with a lot of money, to join their wealth management platform. Like, this might be a loss leader. Like, look, we have the cheapest products in the market. We want to manage your money. You should be diversified. We believe.
This isn't just another ETF. Morgan Stanley manages $9.3 trillion in client assets. Their fee is 0.14%, cheaper than BlackRock. Day one, they pulled in $34 million. Bloomberg put it in the top 1% of all ETFs launched ever. And they're not stopping there.
We really need to build this out internally. We can't just primarily rent the technology to do this. People expect Morgan Stanley, they trust our brand to be no fail. And when you sit in that position, you have a significant responsibility to your clients to make sure that you're delivering that in any level of technology. So I think that's one of the things that we want to do. It's a totally different environment to know that you are custodying your assets. You have legal custody with Morgan Stanley, and Morgan Stanley is overseeing those assets for you.
To custody and buy and sell crypto, and Bitcoin specifically, and probably some other coins. Do you think you'll offer yield and lending services against that Bitcoin?
I absolutely. That's part of the discussion and the exploration. It's a natural part of the roadmap to continue to explore.
Custody, exchange, yield, lending. Morgan Stanley is building a full Bitcoin bank inside a traditional bank. E-Trade is about to let regular people buy spot Bitcoin. This is the second wave of institutional adoption, and it's happening while the fear index is still at 12.
So this is the banana zone. Here we are now. It can't be clearer to me. I've shown you the macro evidence, the technical evidence, the sentiment evidence. Everything here suggests to me that hold on to your hats, don't fuck this up, don't lose control of your tokens, don't use leverage, don't get your wallets hacked, just sit with it, be careful, don't get FOMO, do all of the right things, and we'll go up to the next phase of correction zone. That's going to be harder, because the next one that happens, we'll have a 35% drop, and you'll all say, is it over? And you'll definitely be sure it's over, and everybody on Twitter will tell you it's over, and it won't be over. By our work, we suggest that because of the elongation of the business cycle, because rates were higher for longer.
Here's the thing, BTC is sitting at 71K right now. BenjaminCowen says that the bear market resistance band is at 78 to 79,000. That's the ceiling, but Iran is buying, Morgan Stanley is building, global liquidity is rising, the floor keeps getting higher and the ceiling keeps getting tested.
Please check in as to where the bear market resistance band is. As of now, as of April 8th, the 20-week SMA is at around 78K, 78.5, and the 21-week EMA is at around 78.9. So essentially the bear market resistance band.
3 stories, 1 message. Bitcoin is being adopted by nations building into banks and validated by data. The fear index says run. The institutions say buy. I know which side I'm on. Subscribe. I'll see you tomorrow.